Hi traders, in this video I'm going to show you one of the basic tools that you need to know as a forex trader. Especially you know that we have been going massively on gold, so I'm going to show you how to trade the advanced market structure and how to use the advanced market structure to trade every instrument that you're trading in the financial market. So now you know that I'm going to be using gold. If you have been consistent on this channel, you know that one of the best instrument that we like trading is gold, guys, especially because of the volatility, guys. So this is one of the reasons that we like trading gold. So I'm going to show you how to use the advanced market structure to trade all instruments, especially gold and silver, guys. This is what we are going to face today. This is what we are going to do, and I believe that once you get this is one of the basic tools that you need to become a successful forex trader. Because most of the time I discovered that it's not because let me say your analysis is bad or some of your tools is bad, but the basic problem why we keep on getting stuck in the market, or you keep on being victim of liquidity swap, is because you don't understand the direction of the big boys. You don't understand the direction of the main market structure. So mostly you have been trading against the structure, because I discovered this has been one of the 70 to 80% of one of the reason why you, especially beginners trader, have been victim of losing trade. So now this is, guys, this is what we are going to face, the advanced market structure. I know we have dealt on what a market structure is, so we are going to recap from that aspect. Then I'm going to take you deep into the market, the advanced market structure. So what you are going to expect in this video are things. We are going to the basic of market structure. We are going to the shift and break of structure. Then we are going to how to use the time frame alignment for trading. Then we are going to use then I'm going to show you how you are going to take a trade, review markets within the trade or within the market structure, guys. So now these are the 4 things that I'm going to show in this video, guys. Just stay with us. Remember, if you're new on this channel, don't forget to smash on the alarm and the subscribe button, guys. These MJ peeps, guys. These MJ peeps, guys. These MJ peeps. Let's go now. Now you see now we have been holding gold recently, and we are, since from this guy here, we have been holding gold, and gold has broken through our TP1. We have held that and break that massively. Now gold is resting on our TP2. So even though we are seeing a little sign of gold dropping a little, maybe from this to this zone, we are seeing that it's possible, based on the analysis, that base gold can retest this before going. But anyway, this is how trading works. Then our main target is this guy here, this RTP3. This is what we are expecting. So meanwhile, so now let me round it up so that I will show you how to make how to catch gold. Because even this trade is just the concept of advanced market structure, guys. It's just following the game. How do we know that gold will reach here? Is advanced market structure. How do we know that gold is going to reach this guy here? It's still advanced market structure. How do we know that now we're expecting gold to reach? It's still the concept of market structure and advanced market structure, guys. This is just the concept. This is one thing. Once you get the market, you get your structure, you understand where structure is going from the short-term base to the long-term base, guys. The only thing that you need to do is to rest and allow the pips, allow trade to give you the pips, guys. This is it. Allow the market to give you, allow the market to give you, allow the market. It's very simple. That's how it works. So now this is it for guys, for these guys. So now let's go to the our main work of today. Let me go to the little basic of what a market structure is. I told you earlier that if you have been consistent on this channel, I told you that earlier that there are 3 kind of structure that you need to know. In fact, what is market structure? Market structure is simply means the direction of price or the direction of market per time. It's very simple. It's just like, where is price going? It's just, or where is, or the direction of where price is going per time. That is market structure. So one of the advantage of using in fact, you cannot be a profitable trader without knowing what a structure is. because now you have to know, especially if you're using technical analysis. You know, the concept of using technical analysis like this, using charts to make analysis, is that we are predicting future price based on what has happened in the previous life. So that's how we make decision using technical analysis in the financial market. So all we do is that we check, okay, now what have we seen that has happened before, then we are going to use it to predict or to forecast what is going to happen in the future. This is how this is what market structures is, it simply means. So now you see from these guys here, all what we have been using to predict this future price is that we have seen, okay, we saw that this is what has happened in this, from all these zones here we have seen this is what happened, this is what has happened. So now we make this decision. We know that since this is what has been going on, this is the decision now that we are going to take, because we believe that whatever has happened yesterday will surely repeat himself today. So it's just pattern. This is the basic of technical analysis, and this is the basic of market structure. So as for you to be a profitable forex trader, you have to know where is price going to. You have to know where is price coming from, and where is price going to, for you to become a profitable forex trader. Now this is the advantage, this is the concept, and our use of market structure is it will show you, okay, where is price coming to or coming from, and where is price going to. Now this is what market structure is all about, guys. So now based on this, I told you this is what market structure is. Market structure is just knowing the direction of price per time, or where price is coming from, or where price is going to. This is what market structure entails. So now I told you also in the basic videos that there are three types of market structure. Now let me still explain this. Then before we go to the advanced market structure, guys, you need to stay and see the advanced market structure. It's very, very important. So now the three market structure that we have is, the first one I told you is a bullish market structure. That is, we can only also call it an uptrend. Now let me use my chart. Let me use this as to show you before we go to the chart. Now when we say bullish market structure, is when you see your candles making higher high, higher high, higher low, higher high, higher low, higher low, higher high again. So now this is what we call bullish market structure or uptrend. That's when you see price is going up. And the basic thing that you have to see in a bullish market structure is, one, you need to see this higher high. This is a higher high. You need to see this higher high and this lower low. You have to keep on seeing this higher high, higher low, higher high, and higher low, in the sense that this high have to be higher than this high, and this low have to be higher than this low. So you have to see this high, this low, this higher high, this high, meaning that higher high, meaning that this high now is greater than this higher high, and this low now is greater than this higher low. So now what do we expect to see next again is another higher high. You see it? This is an ideal bullish market structure. An ideal bullish market structure. You have to keep on saying this. So now what do we expect to see next again is another higher high. Now it's another lower higher low. So once we see a low, for example, once we see a low that is lower than this, it's no longer a bullish market structure. Let me say in this case now, you see, because this low, we are expected to see a low that is higher than this low that is here. So once we see a low that is lower than this, it's no longer a bullish market structure. So now this is what we expect to see in the bullish market structure. Higher high, keep on seeing them, keep on seeing these guys. These are things that we keep on seeing. This another higher low. So now when you see something like this, when you see price forming things like this, it means this is called a bullish market structure. This is a bullish market structure, guys. This is a bullish market structure. This is a bullish structure. This is a bullish structure. So now this is a bullish structure. So now this guy now over here is a bullish market structure. Let me do it so that you see it proper. Now this is what we call a bullish market structure. When you see price forming Remember I said higher highs, higher lows, higher highs. Now let me show you what a bullish market structure is. Let me show you what a bullish market structure is on the chart. Let me show you. Now you see from, let me use the past data so that you see it properly. You see here, price is forming. You see this guy here, from this guy here, you see it from here, price is forming. Let me make it a little bit bold so that you see it. Now you see this a higher high, you see a higher high, you see this higher low, then price came again and form another higher high. You see it, this another higher low, this price came here again and form higher high. You see it, then form this small higher low, then price came again and form this guy higher high. You see it, this higher. So it means from this point, from this particular zone here, from this guy here to this guy here, is a bullish market structure. This is bullish structure. All this zone now is bullish structure. You see, so now you see one simple way that you're going to know a bullish structure is, you see price is going up, is going up, is going up. This is just a very simple way I'm going to know a bullish market structure when price is going up. You see, this is what I mean, guys. This is it. Let me return my zone. I took up the zone, our TP3 zone. Let me bring it back. This is our target. We are waiting to see price break through the zone, break through that guy. We need the guy. We need it. Our TP2 has been taken. I'm back. Let me come back. Yeah, it's back. Okay. Now this is the first structure that I told you. Now let me show you another example. Okay, let's go to USD. I think USD cut, right? Because you can see this structure on. You can see this on all. Okay, now we are on. Let me show you on USD JPY. So I told you can use this concept in all instruments, guys. So now we are on USD JPY. Now it's still the same concept, guys. I told you once you see price now in this zone, take note of this zone here. Take note of this zone. You see this zone, all this zone has been bullish market structure. You see price, this is a higher low that we have. Price formed this, came and formed this, price came and formed this one also, and came and formed this one. You see how price is going. Price came and formed this guy here, and then formed this guy here. Then price formed this one and came and formed this big boy here. Then after this, price came and formed this high. So it means from this guy here, from this zone that we are here, from this particular zone to this particular zone, is bullish market structure. So now this is it for that, guys. It's very simple to spot out your structure. I told you earlier that you have to know your structure. Your first assignment on trading as a trader is, in any instrument that you are trading in the financial market, you have to know the trend, the market structure that the price is operating at, based on the time frame that you are using. You have to know the market structure. You have to know. You have to follow the trend. You have to follow the structure. So as long as you want to be a profitable forex trader, you have to know this. You cannot do without this. So now that is it for this, guys. Now the second aspect that I'm going to show you is the second type of market structure. I told you earlier the first one is bullish. This is what we have here when price is going up. Now the second one that I told you earlier is the bearish market structure. Now this is a bearish market. So when you see price forming lower low, lower high, lower low, lower high, lower low, lower high, and lower low, lower high, lower low. Now just as I've told you recently, I told you one thing that form a bullish market structure is when you see this high is greater than this high, or higher than this high, and this guy here is higher than this guy. The same thing here. One thing that make a bearish or a downtrend, you can also call it a downtrend, is when you see, now you see this is the first low that we have. This is the lower, this is the first low that we have. You see this low now, this, let me start from this guy here. You see this low here, you see this, okay, from this guy, let me start from this guy. Now you see this is a lower low, this is a lower high, this is a high, this is a low, this is a high, this is the low. Now the next thing that we saw is that this low became more lower than this low, and now this high is more lower than this high. Now we saw another low again that is lower than this low, and we saw another high that is lower than this high. Then we saw another low that is lower than this low, and we saw another high again that is lower than this high. So now in this case, what you will see is a low that is lower than the low, and a high that is lower than the previous high. A low that is lower than this low, and a high that is lower than this previous high. So that's why we call it a bearish structure. So let me also indicate it here so that you see it. Bearish, let me also indicate it here. Bearish, this is a bearish structure. This is, sorry for that, this is a bearish structure. This is a bearish structure. Is a bearish structure. This guy here is a bearish structure. Remember I said the first one is a bullish structure, the second one is a bearish structure. And also let me show you a bearish structure here on my gold chart. Wow, I told you guys it's fun trading gold. It's really fun trading gold. It's fun trading gold. It's fun trading gold. It's sweet. It's very easy to build your capital. So now this is it. Let me show you from this zone here to this zone here. This is a bearish market structure. You see what I told you earlier. This is the high that we have. This was the high that we have here. This is the low that we have. This is our starting low. You see, then price came and printed a high that is lower than this high, and printed another low that is lower than this guy here, and printed high that is higher than this high, and printed low that is lower than this low, and printed also another high at this zone here. You see it, then printed this low that is lower than this, than the low, then printed a high that is higher than this high over here. That's what price keep on doing. Printed this low, then printed this high also, then printed this low, then came and print from this zone. That was when the bearish structure ended from this guy here, because I told you once you see this, I'm going to show you recently what this was, the meaning of this. Once you see this, what do you call it? I'm going to show you later on. So this is part of the package that you're going to expect, guys. This is a part of the package that you're going to. So now this is an ideal example of a bearish market structure. So now this is what you expect to see on your chart when it comes to identifying a bearish market structure. This is what you expect when you see price printing these stuffs. Okay, let me get rid of this also. It's funny, guys, I keep on moving my TP2. Is it because we are done with this PP2? Price has a milk our TP2. Okay, guys, let's now the third market structure that I told you that we have is the consolidation, a ranging structure. Is is the ranging structure. Is the ranging structure. Is the ranging structure. Is the ranging structure. Okay, let me show you what a ranging structure is. Where a consolidation is. When you see price maintaining a particular peak, see what price is doing. You can even see price doing something, anything. It can do anything within the range, do all these things within the range, but still it's still maintaining the range. It's still maintaining. So now once you see something like this is called a ranging structure. And why I'm showing you this is because the way you trade all this structure varies and it matters. You see, that's one of the problems that I told you. One of the reasons why you have been spot out in the financial market. Mostly, it's not because your analysis is bad. I told you it's because, and you have been going against the structure. When price is going buy, you are going sell. Price will take you down. When price is going sell or is going bearish, you are going up. And when price is doing this guy here, this guy here, you are expected to go bullish. Or this is one of the reasons, guys. This is one of the reasons. So now this is what is called a consolidation or a ranging structure. You can call it a ranging. You can call it you can call it ranging structure. Ranging structure, guys. This is a ranging structure. So now let me still show you a ranging structure let me show you a ranging structure on the chart. I think I spotted out one on gold. Okay, let me show you this. Let me use this. Let me use this. This is what I mean, guys. You see what price has been doing here. Price came and gave this touch. You see, it came and gave this touch. It came back again on this guy here, the same touch. Came here, the same touch. Came to the same range on this guy. Came to this guy here. Came back again. You see what price has been maintaining the same range. It was after this guy that price break through here. So now you see what price has been doing. Price has been maintaining this particular range here. This is a ranging structure, guys, or consolidation. Price has maintained this particular peak here. Price has been trading within this range from this guy here, to this guy here. So now this is a ranging structure. A ranging structure is very simple. Price is not going up, price is not going up continually, and price is not going down continually. Price is going up and price is going down. So that is what a ranging structure is. So now I'm going to show you what also a break of structure is. That is the next thing I'm going to show you, is what we call a break of structure. Now I'm still going to use this chart so that you buy on time. Now you see, when price is going this higher high, higher low, higher high, once price break this previous high, you see this previous high that we have, it means this is a break of structure. Price broke through this maintained this is a break of structure. Now you see it. Now after this guy here, price came again and broke through this higher high. You see what I told you before, you'll be seeing higher high, higher low. Now a break of this, a break of structure. This is another break of structure. A break of structure is just simply is just example in bullish market is when you see price break this previous high. When you see price break this previous high, this zone here, now this zone here is called a break of structure. This zone here is called break of structure. Break of structure. Yeah, this is how we write it. Break of structure. This is a break of structure zone. This is a break of structure zone. You see what price did? This is a break of structure zone. This is a break of, so the same thing when it comes to the bearish also. You see it when we say price is going here, went up again. Now this zone over here also, this guy here is also it's also a break of structure zone. Okay, this is my break of structure. Break of structure in the bearish time. This is the break of structure in bearish then this is the break of structure in bullish. This is my bullish structure and this is my bearish structure. Then this guy over here is my consolidation. This is my consolidation, so you get note of this. Then the next thing that I'm going to show you now is in the basic structure is a shift of market structure. Let me show you over here. Now you see when you see price going bullish structure, this is a bullish structure. Once you see price going bullish structure, then when you are expected to see this break of this particular structure, you see it when you are expected to see this break of structure, then price didn't break the structure, and then what you saw price was price changed. You see it in place of price printing higher high, then price printed a lower high. You see what price did? Now automatically this is called a shift of market structure. Let me use my trend line so that you understand what I mean. Now you know from this guy here, this zone here, we said that from this zone here we said that price is going bullish. Price was going bullish over here. Then the next thing we expected to see was price printing this guy here. Then price refused to print another higher high. Then price printed higher lower high. This is shift of market structure. So it means price shifted from bullish structure to another structure, because we have not yet seen whether it's a bearish structure or consolidation, but all we know was that price shifted from a bullish structure to another structure. So once we see this guy here, see this is a proper shift of market structure. It means from bullish structure to bearish structure. So now this is it. This is shift of structure. Now this zone here is called shift of structure. This is where the shift of structure started. Shift of structure. This is shift of structure. This is shift of structure. This is shift of structure. From this zone here is where the shift of structure started. This guy here, because we are expecting price to print a higher high. So now this is what is called a shift of structure in the bullish scenario. Then in the bearish zone also, let me give you for the bearish zone also. When you see price going, you see what price is going. When you see price, let me take it from this up so that it will be a little bit big so that you see it properly. When you see price going, you see what price is doing. Then price in place of price to go down, then price printed this. You see it. Now this guy over here, this guy from this zone over here, You see, from this guy here is where our shift of market structure begins. This is where our shift of structure begins. This is where our shift of structure begins. From this guy here, this is the genesis of our shift of market structure. You see it? This guy here, this is where our shift of structure is. This is our shift of structure. So there is it for that, guys. There is it. Now I believe that you know what a bullish structure is, bearish structure is, and consolidation is. Then I believe you know what this break of market structure is, both in bullish and in bearish. I believe you know what these guys are. Then I do believe also that you know now you know what a shift of structure is, what a shift of structure is in the bullish scenario and in the bearish scenario. I believe that you know what this is. So now, since we are done with this, the next thing that we're going to do going into is our advanced market structure, guys. I know this is what you guys have been waiting for. We are going to the advanced market structure. Our advanced market structure. I'm wiping this off. I'm wiping this up off. So we are going to the advanced market structure. I'm taking this off also. I need a little bit space. I need a space. I need the space so that you see it. I don't want your attention to be here. I need space. I need a space. I need a space. I need a space. I need a space. This business, guys. This our business. This our business. I need to provide you guys with the best information that you need. Let me get this out. Yeah, they are off my chart. They are off my chart. They are off my chart. Out of my space. Okay. So that is it for that, guys. Now we are going to the advanced. Is very simple, guys. Now it's called time frame alignment. That's especially as a day trader. Let me show you this concept using day trading. So let me get rid of this so that we'll use it to make analysis. Let me show you how I took my trade. I'm going to still use the concept. Show you the concept using gold also. Now when it comes to time frame alignment, this is a top-down analysis concept. So the target here is get this. You have to get this. You have to get this. Now the target here is that we are after getting our structure from the higher times of view or the higher time frame, bringing it down to the lower time frame. This is what we are after. I repeat again, is we are after getting our market structure from the higher time of view to the lower structure time of view, from the higher time frame to the lower time frame. The reason now is that as a day trader, most of our entries are in the lower time frame like 15 minutes, 5 minutes, or maybe some of the day traders trade using 3 minutes, but mostly it's within the 15 minutes and the 5 minutes. These are where mostly our entry and confirmation time frames are. But the problem of this is that most of the market makers, that is the big boys, the one that move price, most of where they enter price is not within the lower time frame. They don't day trade. Most of them don't day trade. Most of them, what they do is that they trade within the higher time frame. So but the concept here is that we are trying to still make our entries in the time frame based on what they are doing, even in the time and the higher time frame. So we are bringing the higher time frame into our lower time frame. This is the reason for time frame alignment. You have to get this, guys. You have to get this. Let me say, for example, now this is what I mean. Let me say, for example, you are taking your trade within the 15 minutes you're taking your trade within the 15 minutes, or you're taking your trade within the 5 minutes. So now remember I said that the big boys don't take their trade within 15 minutes or 5 minutes. Mostly what they do is that the time frame they mostly take their trades mostly is from the daily time frame. It's in the daily time frame, daily, mostly daily, monthly or weekly, monthly, and monthly, then upward. Mostly these are the time frame that the big boys use. Mostly these are the time frame that they use. So now what we are doing on time frame alignment is to take our trade, to position our trade from this guy here, from this particular point here to here. This is what we are doing now. We are trying to know, okay, what are they doing in this place, what is their structure, where are they going here. Then we bring it down to this particular zone here. This is what we do. So it means we are still making our movement. This is their movement. If they are making movement like this, we are still making our movement based on still, we are still making our movement based on their movement there. So if they are going, we are going, guys. This is what we are doing in time frame alignment. So we are still aligning our time frame based on their time frame. These are the big boys. They are taking their trade here, so we are still taking our trade here based on what they are taking here. So now this is the concept of time frame alignment. So let me show you this, how we do this. Remember, I'm leaving this here so that you still get what I'm saying, so that you get the picture. We're making our decision still based on how they are making their decision. So now, as a day trader, there are 3 time frame that will make use. It's called the triad time frame. 3 time frame. Now, since we know that the big boys take their trade from daily time frame, weekly time frame, and monthly time frame upward. So now we are picking one of these time frame to go with. So the time frame that we are picking here as a day trader, because if you are a day trader, we are using this. If you are a swing trader, you use the weekly, but you can still use the weekly as a day trader. But for me, I use the daily time frame. You can still use the monthly time frame. It's your decision. But me, I use the daily time frame because it's more easier for me to simplify and fit within the big boys move within my 5 minutes or 15 minutes time frame. So now we are taking the daily time frame. Remember, we are using the daily time frame. You have to get this. We are using the 4 hours time frame. We are using the 4 hours time frame, and we are using lastly the 1 hour time frame. We are using the 1 hour time frame. So now these are the time frame that we are going to use as a catalyst from here to here. So here we have the daily time frame. So let me get from here to here. Now we are using these guys here. We are using this. We are just adding to this. So now our way from this zone here to this zone here, we are going to add 4 hours and 1 hour time frame. So now this is the first thing that we're going to do. In this, we are going to the first time frame, that is the daily time frame here. Now in the daily time frame, now the first thing that we do is that we need to know is our market structure. Remember what we said? We said that this is time frame alignment, our market structure. Now what is price doing in the daily time frame? What is our market structure in the daily time frame? So now you see, I told you earlier, you can still use different concepts to know this, but you can still use the first concept that I told you earlier, knowing, okay, where is the higher high, higher low, where is the lower low, lower high. So now based on what we see, this look like a bullish market structure. If let me just use, you can use this trend line here. This is what I used. I like using this. It's very easier for me to identify my market structure. This is the truth here. This trend line, you can just draw it from here. I told you how to use trend line. If you don't know how to use a trend line, just go to, there's a video there, just go there, you'll see how to use trend line. So this is the very simple thing I like doing, is to use, I can use a trend line to know the market structure that we are in. So now since I know this, or we can still use the higher high. Since you know that it's a bullish, you see this is our low, right? This is a high, this is low, this is a high, this is low, and this is another high here, this is the low. So from here I know that okay, the big boys are going bullish. This is what they are doing. They are going bullish. I know that they are going bullish since I've seen their direction on this daily time frame. Even though from this zone here there's a little violation, but I'm expected still is still within our lower low. So now the next thing that I'm expecting this candle, or the next move that I'm expecting is to see another higher high, since we have already seen this one here over here. Since we have seen this one here, so what I'm expected to see is another. Since I told you, until this guy here is violated, meaning violated in the sense that price, in place of printing this, price came and printed something below this guy here. That's when there's a shift of market structure, we said, right? That's when there's a shift of market. Once this guy is violated, that's where but as long as anything that goes on within this zone here is still bullish until we see this particular guy here being violated, that is when we say that there's a shift of market structure. So now since this guy is not violated yet, we are still on a bullish market structure. We are still going bullish, guys. So it means the daily time frame is bullish. So since we know that the daily time frame is bullish, what do we do next? Now the next thing that we do here is we go to our, remember you can write it here, daily time frame. Let me do this. Daily bullish, daily bullish, bullish. Our daily is bullish. Since we know our daily is bullish, the next thing that we go to is where the 4 hours. The next place we go to is 4 hours. 4 hours. Now in the 4 hours, now from this guy here, okay, I got rid of this. Let me keep this zone, because this is the zone that we are going to say that this is the only zone that we'll say that once we see price broke through this. Remember we said that this is when we said that there is a shift of structure here. So now this is our daily zone. I can still indicate this as our daily zone. You can still indicate this as daily zone, so that you take daily zone. You can still indicate this as daily zone, so that you remember easily if you think that it will be a little bit confusing. I'm shifting my guys here. I'm shifting my guys here. So that I'm leaving it, guys, so that it will still be here for you. It's still here. I'm not taking it off, guys. It's still here for you. It's still here for you. Yeah, this is it. So our daily zone is bullish, as we have said. Then our 4 hours. Now from our 4 hours, what do we see? What can you see? Remember, from this guy, this is the beginning of this is the end of daily time frame. So now here, this guy said this is where the 4 hours time frame is. The same thing also, you see, from this zone here, from this zone to this zone. Now you see what price is doing. Still going bullish. Why am I saying bullish? This is the low, the daily zone low. This is the high. This is the zone here. This is the high. This is another low, and now this is the high. So it's possible for me to see a low around this guy. So now in the daily time frame, in the 4 hours time frame, I mean also is bullish. Is bullish. and remember you need to know the 4-hour zone. Now the 4-hour zone, this is our 4-hour zone. 4-hour zone in the sense that this is the only zone once we see price violate this zone. I told you what it means for price to violate a zone, meaning that price went below this guy. This one will say there's a shift of structure. So now this is our 4-hour zone. 4-hour zone. This is our 4-hour zone. This is our 4-hour zone. Price is respecting our 4-hour zone. Let me push this. This is our 4-hour zone. Sorry for taking your guy out. Okay. Now the last thing that we do is our 1-hour zone. Now we go to the 1-hour time frame also to see, okay, now what is price still doing? You see what price is still doing? You see what price is still doing? If you can see what price is still doing, you can use this trend line, or you can come over here. You can use this one. Yeah, I'm using this guy here. Let me use this guy here. I'm using this out. So it's the same method you use here. The same method. So what are we doing there? What are we doing Okay, what are we doing here? So now this is our, we said the last one is our 1-hour time frame. So now what are we seeing here is the same thing. You see this guy over here, this zone, and this. Excuse me, let me reduce this. Let me do that. Okay, this zone and this zone. You see it? This zone and this guy here. Then this guy was from, when this guy is from, yeah, we are going bullish. Then this guy was from also. You see it? Then we saw that this guy also is from. So now this guy is from. Okay, now that is it. You see now this one, it look like I don't know where is this. How comes it came to my chart? I didn't pick you, it came to my chart. Okay, now this guy here, this is the guy that I'm seeing. You see it? So now this is still going bullish. So now where is our 1-hour zone? This is our 1-hour zone. So as long as price do not violate this, as we said earlier, price did not break through here, it means within the 1 hour we are still going bullish. This is our 1-hour zone. So now it means, remember, our 1 hour now is based on our trials principle. Our daily is bullish, our 4 hours is bullish, then our 1 hour is bullish. So now since both the three are bullish, now what we do here is it's a very good sign that we are going bullish, guys. It's a very good sign we are going bullish. So it means both our the market makers, I told you earlier, they are going bullish, and even the lower time frame they are going bullish, so they are in alignment. It means this is time frame alignment. There are scenarios in which you see that maybe one is going bullish, the two are going bearish, or two are, maybe there is different in structure. So if you find your case in this, I will show you what you need to do. But for this, now this is a very nice trade to go on bullish. It's a very nice trade. So now once you get this, it means your three time frame are in alignment. The trade as a day trader, daily, 4 hours and 1 hour, they're in alignment. Now the last thing that I told you I'm going to show you is that how to trade within your market structure, or how to trade within the advanced time frame zone. This is the last thing that I'm going to show you. So now in the advanced market structure zone, what you are going to, there's two ways you can trade it. The first thing is that you are going to trade a break of market structure. The second thing that you can trade is a shift of market structure. I told you this earlier. That's the use of that break of market structure or a shift of market structure. I told you this is a break of market structure, right? This is a break of market structure. This is a break of market structure zone. This is the zone that we are expecting. So now what are we expecting? We are just expecting very simple stuff. We are expecting price to come to this guy here. To come to this guy here. This is where we are taking our trade. 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 This guy over here is where we are taking our trade. Or let me say in a bearish scenario also, this is also what we are going to do. This is the zone here. This zone here, we are taking our trade on this zone. On this zone here, we are expecting price to come to this zone. We are expecting price to come to this zone. We are expecting. Okay, this is what we are expecting to see also. This is this guy here. Now these are the scenario. Now let me just take this bullish point of view, the bullish scenario. So now once the concept here is very simple. Now once we see a higher high being formed, this is what I mean to see a higher high. Now we see a break of structure. Now this zone is a breaker. Once we see price break, we are just going to wait for price to pull back, meaning that price will come back to the zone of the higher low. Once we see the zone of the higher low is being formed, the next thing that we're going to do is that we are going to enter at the zone of the higher low. So once we see price, before price take this movement, this is where we are going to enter the price. We enter the trade. This is the first way that you are going to trade. That is using the break of structure, or you can trade also using the shift of market structure. Let me still come back here. You can still trade using the shift of market structure. Now the C example, let me use bullish example. Price is going here, price is going here. Now expecting price to price not reach here. Then the next thing that we saw on price was that price went down and violated, let me say example, maybe this is our daily zone. Remember we said we have 3 zones. Maybe this is our daily zone. Now price violated this our daily zone. This our daily zone. Then we, at this moment, even though we saw a violation of this zone, we are not going to take the trade. Now what we are going to wait is that we have to wait for this to form first. We have to wait for price to go up to form the second leg. Once price form this second leg, this is when we are going to take our trade. This is when we are going to take our trade. Sell now in this case. This is when we are going to take our trade. This is where at this point we are taking our trade, because now price has shown us that there is a violation of this bullish trend, meaning that the bullish structure has ended. Now we are going on bearish structure. This is where we are going to. Now we are going on bearish, so we are waiting for the bearish movement to start. Or you can even make it more conservatively by allowing price to form another lower low. Then at the break of the structure, this guy here, break of this structure, once you see this zone form at the break of the structure, this guy, the break of this structure, you can you can take your trade at the big break of this structure. So you can take your SL a little above the zone, your lower low, your previous lower low zone. So you can take your trade here, or you can take your trade here, even though it's more secure taking your trade, because here there's a proper confirmation that yes, the bearish movement is going on. So now this is how you take this kind of trade, guys. This is how you trade within the market structure or the advanced structure, guys. So now is, I told you, you can trade, is either you trade a break of structure, that is this case here, you are going with the trend, or you trade a shift of market structure, a shift of a structure. This guy here, after you waited for a violation of the previous trend, then when it break, you wait for a little pullback. Once price is going good after the pullback, that's when you are going to take your trade. Your SL is a little bit above the zone there, the zone of your violation. So now these are the two ways that you're going to trade using the advanced market structure, guys. That is it for that, guys. I think we have covered a basic what basic and advanced structure is. So maybe if you have any comment, any question, any video that you want us to work on, you can drop it in the comment box there, guys. And if you're new on this channel, don't forget to subscribe and to smash on the alarm button, guys. Welcome to MJ Peeps.